Yo, what is up, everybody? This is D Chantilly here, and today I have a very interesting stock for you guys, and it is Paychex. When I was going around looking for some earnings to play, I stumbled across Paychex, and as I was looking through their past balance sheets, their past statements, and quarterly earnings, I was very impressed with this company. And what Paychex does, they're a provider of integrated human capital management solutions, or HCM, meaning they deal with payroll, hence the name Paychex, human resources, retirement, and insurance services for small to medium-sized businesses in the United States. It has a stock price around $75 a share, giving it a market capitalization or a valuation of about $27 billion. Paychex also has a nice sized dividend of about 3.3% or $2.48 a share. Paychex has also been innovating and evolving with the current times. They recently launched Paychex on Demand, which allows employees for companies to access their paychecks before payday. They also launched Paychex Time for the Apple Watch, which allows employees to easily be able to clock in and out from their watch. And so as you can see, they have been innovating and coming up with new ways to solve HR challenges. And now that we know what Paychex does, the size of the company, what innovations they're doing, and whether or not it has a dividend, let's take a look at some financials, and we're going to start with the highlights from the most recent quarter, which is the third quarter 2020, and then we're going to take a deeper dive into those numbers. For the third quarter, total revenue came in at about $1.1 billion, up 6% year over year. Operating income came in at $470.1 million, up 10% year over year. Net income came in at $354.5 million, up 9%. Adjusted net income came in at $351.2 million, still up 9%. Diluted EPS 98 cents a share and adjusted EPS of 97 cents a share. And so now let's take a look at the income statement. And so these numbers are year over year. Management Solutions came in at $850 million, up 6%. PEO and Insurance Solutions came in at $271.5 million, up 10%. And according to Business News Daily, PEO stands for Professional Employer Organizations, and it deals with human resources solutions for small to medium-sized businesses that don't have an internal human resources staff or employees. PEO takes the place of an internal human resources department by handling your HR, payroll, and employee benefits. And that brought a total service revenue of about $1.121 billion, up 7%. Then you have interest on funds held for clients that came in at $21.2 million, down 7%. And this can be attributed to us being in a low interest rate environment. And that doesn't really worry me because number one, it's just not that big a part of the business. It doesn't have a major impact on revenue. And so, secondly, the federal funds rate is at 0%, and they expect it to stay there till 2022. And the feds can take rates negative, but that would just not make any sense. And so I don't actually see them doing that. But either way, interest rates can't get much lower. And so once interest rates begin to go back up, they should be beneficiaries of that. And so as far as the interest on funds held for clients, they're pretty much at the worst case scenario right now. And so when interest rates go back up, they should be able to charge more interest on those funds being held. And so that brought total revenue to about $1.142 billion, which was up 7%. And then we have our expenses. Operating expenses came in at $340.3 million. Selling, general, and administrative expenses came in at $332.3 million, bringing total expenses to $672.6 million, leaving an operating income of $470.1 million, up 10%. And then we have our other expense slash income, which ended up costing them about $5.9 million. And then you have income tax of about $109.7 million, leaving them with a net income of $354.5 million, up 9% year over year. So the income statement is looking good. Revenue's up 7%, operating income up 10%, net income up 9% year over year. And I was very impressed. And now we take a look at the balance sheet, where I was also very impressed. The balance sheet has cash and cash equivalents of $780 million, up 15% from May 31st of 2019. And then they have restricted cash of $59.3 million, up 17%. And restricted cash is cash held onto by the company for specific reasons, and it is not available for immediate ordinary business use. And so when you combine the cash and cash equivalents plus restricted cash, that comes out to $839.3 million, which is up 15%. And to go off on a little tangent for a second, and this doesn't apply to this company because they don't have inventory per se, but I don't like to consider inventory when looking at liquidity. Because if you're in a cash crunch and you need money now, you're not going to be able to sell your inventory for market value. And so that's why I don't really like to use inventory as far as looking at a company's liquidity, because they won't be able to cash in that inventory at market value or above market value in most cases. But to kind of get back on topic, as far as this company, they have interest receivable, and that can be defaulted on. Accounts receivable can too. That's why you have to account for doubtful accounts in accounting. And so in the current environment where companies are going bankrupt, I wanted to see how strong their cash position was. And it turned out to be very strong. Paychex cash position, which is cash and cash equivalents plus restricted cash, can cover their accounts payable, short-term borrowings, accrued worksite employee compensation, and related items. And so when I saw that, I was really encouraged. And now let's actually, get back on the topic. I did this company's current ratio minus the client fund obligations, and it came out to 6.1, meaning they can pay off their current liabilities 6 times over. But that's a scary high number, because that can mean, and it doesn't 100% mean it, but it could imply that they're having trouble securing finances or they're not using their assets efficiently. But once you add in that $4.272 billion in client fund obligations, which represents the company's contractual obligation to remit funds on the client's behalf to tax or regulatory agencies or client employees, had to go to sec.gov for that one, that brings the current ratio to 1.26 times, which isn't great, but it's still good. The company's long-term liabilities come out to about $1.321 billion, and that's very low. And then the company also has strong cash flows. Net cash provided by operating activities came in at $1.052 billion. Net cash provided by investing activities came in at $364.4 million. And net cash used by financial activities came in at negative $279.8 million. Bringing the net change in cash equivalents, and restricted cash equivalents at the end of the period to $1.137 billion. As far as forward guidance, what the company is expecting, how they're navigating the pandemic, we don't know. We don't really know right now. But as I was reading the transcripts of the prior conference call, Efrain Rivera, Senior Vice President, CFO, and Treasurer, stated that they will give guidance this upcoming quarter. And to quote Rivera, and I'm beginning the quote now, "We will give guidance during our fiscal 2020 and fourth quarter call in June," end quote. The earnings call is actually going to take place on July 7th, 2020, according to Earnings Whispers. So if you want to wait it out until they report earnings to see what the company has to say and how the financial numbers are looking during the heat of the pandemic, and I hope I'm not speaking too soon in regards to the heat of the pandemic, but if you want to see the financial results from March, April, May, when a lot of businesses were closed down, first before you buy, that makes a lot of sense. But as far as this previous quarter and research regarding Paychex, I think there's a lot to like about this company. Strong cash flows, revenue is increasing nicely, net income increasing almost double digits, both year over year, and the 9-month year over year for PEO and insurance solutions was actually up 36% for the month ended February 28th, 2019. They're not overly expensive either, like a lot of the other SaaS companies and tech stocks out there, as they trade only 24 times earnings. They have a safe dividend, and so there's a lot to like about this company. Let me know what you guys think down in the comment section below. Do you like Paychex? Do you see a bright future for this company? I'm very interested to see what you guys have to say, and I look forward to reading and replying to the comments down below. Hope you enjoyed the video. See you next time.